The crypto bottom is in, and last night I found 9 charts that are going to show you why I believe that. And after watching this video, you're going to believe that is absolutely the case. It's Friday, February 3rd. It's 3:30 a.m. If you haven't already, subscribe, hit the notification bell, hit the like button, leave a comment. Let me know what you think about these charts, because for the last 6 hours now, I've been diving deep. I've been putting the scuba gear on. We were panned out. We're from a bird's eye view, taking a look at these charts on the higher time frames, looking at the key charts that are going to dictate the macro environment and key macro assets that we look at that will spell the direction for crypto and all of our altcoins like XRP, XLM, etc. Let's dive into it. The first chart that we are covering is the USD Tether market cap against the total crypto market cap. And we had laid this out a couple weeks ago saying, hey, this chart is going to tell us when we're entering into a bull market, because the last time that some key things happened in this chart, that signified every single bull run and every single bear market as well too. So let's dive into it. As you can see, I have 3 circles here. We have this green circle, this yellow circle, and this red circle. So this stretches back all the way to mid 2018. What I believe is we're traveling in this channel right now, and it's been going on for about 4 to 5 years now. And how we read this chart is when the USD Tether total market cap goes down compared to the rest of the total crypto market cap, that means that we're heading into a big bull run, and prices for the crypto assets are exploding. That is extremely bullish. So I'm going to grab this trend line up to here. At this point right here, December 2020, that's when Bitcoin rallied hard from 10K to 66K in a matter of some months there. Couple months, it really was fast. And what we are doing right now as we speak, and what we tracked weeks ago, was this trend line. And we had said, hey, something big's happening here, because if we break this trend line, we are going to head into an all-out bull run and the bear market is over, and boom, that's exactly what happened. This broke that trend line back middle of January, and we were calling the market melt up to a T. And you can see this bars pattern laid up over this right here, right? I didn't draw that. I grabbed it right from here. So this is the same thing and the same pattern that's playing out as we speak. And the phase that we're in is similar to right when the bull market kicked off, when we went in an all-out mania mode. And what I believe is that's exactly what we're about to do. The crypto market is going to go into an all-out mania mode. And keep in mind, we're looking at the bigger picture here. It's not going to go into mania mode tomorrow or right when you watch this video, maybe in the next couple of days. We're talking over the next couple of weeks to the next couple of months. And what I believe is going to happen is we're going to go into a mania mode all the way until around May, late April, around May. Same thing that happened back here. Then all of a sudden there's going to be an event. Something is going to happen around the middle of the year that causes this chart to just shoot up. And I believe we'll go into a correction for summer into maybe the fall, August, September. And then when October rolls around, that's when we go on our run number 2, and this pulls back down, and we go into a run at the end of this year to go up even higher. Then there's this other scenario, or continued scenario, when January 2024 rolls around, this could actually break down, and we could see a huge, massive hyper bull run, hyper parabolic phase for the crypto market. So that's what I'm watching there. And if I now show you the similar things that panned out here with the 786 Fibonacci retracement. So I grabbed this low. So the low that we set in February 2021 to this high that was set in June of 2021. Then we literally pulled back. And then by November of 2021, we came to the 786. Once we came to the 786, we started to rally again, and we came up, and then we had this new kind of low that was set here right before we broke up and went into this phase that we're in right now. I believe that we're getting ready to come down to that 786, the same similar thing that we did here after breaking out. And then at that point, we could, go on kind of check up phase, something like that, right? And we could see that same similar pattern play out. At this point, this is looking very similar right here, as well as from this low to that high down to the 786, from this low to that high down to the 786, it's starting to match up. So now if I go on the weekly, the blue cross over the pink, the last time we saw the pink cross over the blue was boom right here, December of 2021. And then we went into our full out bear market. Then the last time we saw the blue cross the pink was right here. That same thing that we're tracking right there, as far as coming down to the 786, right here, coming down to the 786. And the previous time before that the blue went over the pink was right here at that moment that we had circled out. So to me, and then what happened here was huge bull run in crypto. And then right here, huge bull run in crypto, or kind of revisit back to all time high. That was the July, August rebound. And then right at this point, when we bottomed at the 786, that's when we really kind of went from our top again and went into the brutal bear market that we've been in, that we most recently just changed the structure on. So now is the time to get absolutely excited and get super optimistic. And, not to the sense that you're like, oh, it's just going to go straight up, but more of understand where we're at in the macro trend here, the macro structure, and seeing the writing on the wall that, hey, things are starting to really change and turn around here. And you should really start to get really, really excited because, dude, in a matter of months, within a year, your life could change immensely. In a snap of a fingers. It's just like literally it just happens so quick that you can't even believe it. And I'm here to tell you that start believing it, because the same things that are happening before, when boom, all of a sudden, right? All of a sudden, that's all you're going to hear. And that's just like all of a sudden the crypto market just rallied the biggest kind of gain since 2013. It's not all of a sudden. We were tracking it beforehand. And I'm here to tell you again, it's not going to be all of a sudden. We're tracking it beforehand. And what I'm seeing right now is very positive for the crypto space and for 2023. I think the first 2 quarters are going to be very positive and very something to look forward to. So let's keep moving on, because that's only just one chart. If you like what you're seeing already, hit subscribe, hit the like button, comment. Tell me what you see in this chart as well too. Are you seeing what I'm seeing? Because if you are, leave that comment. Let me know. Now let's go into this chart. NASDAQ 100 versus Bitcoin. So how you read it is just like if you were to just say, let's cover that NASDAQ 100 USD and say you were just looking at this chart and it was Bitcoin. The same rules apply. If the chart goes up, that means Bitcoin's outperforming the US dollar. If the chart's going down, that means Bitcoin's underperforming the US dollar. So that's how you would read this. If this chart is going up, that means the NASDAQ is outperforming Bitcoin. Or if this chart's going down, that means Bitcoin is outperforming the NASDAQ. Or you could just say that the NASDAQ is underperforming Bitcoin. And it makes sense as far as, well, if this chart's going down, the NASDAQ's underperforming Bitcoin. It's definitely because Bitcoin's not in a bear market, because when Bitcoin goes into bear markets, nothing could underperform that. And then when this chart's going down, the NASDAQ's underperforming Bitcoin. Well, usually that coincides with Bitcoin bull markets, because in a Bitcoin bull market, nothing outperforms Bitcoin. So I hope that makes sense and you get it. What I want to show you here is, since 2018, we're on the 6-day chart. We got a buy now signal at this bottom. This was literally to a T, the start of the bear market in crypto, late December, January 2018. And like we've been tracking, I've been saying, when we go into this upwards kind of trending channel, and then we see a sell now signal come from the Stargate signals to a break of that upwards ascending channel, that's when we hit the bottom of our bear market and we head into a bull market run. And then that's exactly what we did. So that was March 2019 to around like June of 2019. This was when Bitcoin all of a sudden went 4x in a matter of like 3 months. Bam. Then we got the buy now signal. And that's when Bitcoin went into a correction from that $14,000 level. And we went up here. We did the upwards kind of ascending channel. And then at this point, we had just rolled off a cliff and we broke it. This was October of 2020. So right when we broke this, that's when we went into the Bitcoin bull run that we were just kind of telling you about right here. This was October 2020, December 2020 right here. Boom. Same moment. And now looking at this chart, that's what we saw pan out. So that's why they coincide and we look at both things. And cryptos went crazy at this time. And then all of a sudden, May of 2021, we had a brutal kind of crash in crypto. It went down like 50%. And it's not all of a sudden. We got the buy now signal from the Stargate signals early May. And then we saw us go into a bear market in crypto. And we saw that happen. And we got another buy now March of 2022, right before the Luna crash. And we should have stayed away from crypto at that time, right? We're looking at different charts now. And by seeing this, you're like, I'm not touching crypto until it breaks this down upward sloping trend line. And you saw that and you're like, oh boy, that's not looking good. And then we had the Luna debacle. Then we said sell warning, sell warning, sell warning. And then we got the sell now signal. And we were warning about it up here saying, hey, like it's looking like we're getting rejected here and cryptos might go into a bull run and break out of this bear market. Nobody could believe it. But right now we got the sell now signal. Very eerily similar to back here. We got that sell now signal, a break of the bottom trend line. And now it seems like we're going to see continuation because if you pull up these bottom indicators, the momentum is heading down. And now is the time to get extremely excited because every single time I'm telling you, well, for the past 5 years now, but we could even go back even further. This time back in 2015, we break that upward sloping trend line. Boom. Huge Bitcoin bull market. So that's what I've been looking at. I was looking at this chart and then this chart. And to me, both of them check out as far as we're at the very beginning of the Bitcoin bull market, the biggest one of all time. It's going to be the biggest one, and not just Bitcoin, obviously, all of crypto. And it's going to be the biggest one for all of crypto because after this bull market is over, those life-changing gains are going to be very, very hard to come by because we're going to come down here like that, maybe into 2024, mid 2024, and it's not going to come all the way down here. But that's just going to be it. There's really not going to be the generational opportunity of a lifetime after this one. So that's what we're seeing there. So boom, another one. So we got the 6th day on that. Then if we go into the Bitcoin versus the NASDAQ. So this is the inverse look at this chart. So what we just looked at was this chart. And if you just like flipped it, it would look the same. And this is what we're seeing right now because the 3-week chart, huge time frame, huge. It called this top here in 2013 after going crazy. And then this top here in 2014 nailed the tops. And then we came down and we got our 3-week buy now signal right at the tail end of the bear market. And we got that buy now. And then boom, it was up only. And at this moment, October 26, 2015 was like I just showed you, October 26, 2015. Right here, right when we broke, and you could even drag this over a little bit and say, hey, at this point we broke. And that was right on par with this breaking out and the buy now signal flashing. And you would have held this whole entire bull market, whole entire thing. There's probably so many people who maybe sold there, didn't think he could keep going. And the Stargate signal said, nah, hold those gains, hold them, sell now, right? And you literally murked that bull market in Bitcoin. You really rode that thing out. You squeezed those gains and boom, we went into our bear market. And then 2021, it flashed a sell warnings and sell now right here, called the top. And this is the second time in all of Bitcoin's history that there is a 3-week prepare to buy soon. And we're about to flash our buy now signal. In 9 days and 16 hours, you're seeing right here, stock RSI crossing up. The momentum is picking up. So what we learned in our Q&A live session the other day was we like to see the synchronized cross ups. And this looks very synchronized to me and looks just like every other end to the bear market as well too. You see the MACD curling in like that, right? We're at this stage. The next 3 week in 9 days, if we keep this momentum where we're at, or we just stay where we are, we're going to see this MACD cross and the TSI and the stock RSI, and they're going to cross all at the same time. And after, we're going to get the buy now signal. We're going to get the buy now signal in 9 days if we can keep this momentum for Bitcoin. So by February 12th, we got to see us maintain or rally higher here to really put the nail in the coffin. In 9 days, we are going to know that the bear market is officially done, and we can put on our moon boots and strap in, grab some popcorn, grab whatever you want, because it's going to be a crazy ride and we're going to crush it. Like, we're looking at charts now that nobody's looking at, and we're taking all angles and sides to it. We have the Stargate signals, the software to utilize that nail it. We're looking at fractal patterns, time analysis. We're looking at the fibs. We're looking at our custom indicators, and we got more in development. We're going to be so equipped. Our tool belt's going to be too heavy. Our pins are going to be falling to our ankles with how heavy our tool belt is. I'm telling you, we got it mapped out. And what I did was I grabbed this fractal. So I grabbed this top of the 2013 all the way until 2017 bull run, right? And I even grabbed it actually to the 2019 bear market, playing out way later. And I just kind of threw it on here. And what it showed was, we have stretched the amount of time that we needed to for a bear market. And we're at this phase. Like, it's just so crazy how time and just these signals play out. And like right here where we got the buy now signal is literally where we're currently at in time wise, from the 2014 bull market top to the buy now signal that flashed the bottom back in 2015, late 2015. So literally in 9 days, if we get this buy now signal, it's set in stone and it's up only. So I thought that was nuts how that lines up. And then you can even see the pivot points here too, like top. And then we found our bottom. Then we found our top. Then we found our sideways action. This found a top, but this actually did a new bottom. So that's why there's like this like fake out here where, we could be going, but nah. Back here is more of lower lows, lower highs, lower lows. It was a defined downtrend. This was like a neutral trend. And when it broke, that's when you knew, hey, we're going to tank. And that's what we did. And we were right on par for it. And then we were just kind of going sideways back here, where this was more at a decline because we had not initially gone down and did what we were supposed to do. Here, we actually went up. So we had to catch up to where we're supposed to be. And we did. And we absolutely did. And right now, I'm here to tell you that we're on the precipice of breaking out into a multi-year biggest bull run that we've seen yet, and the last one to generate life-changing returns. And I'll tell you that. So if you like what you're hearing, you like what you're seeing, you like the charts that I'm showing, the new angle that I'm showing, the macro time frames, looking at pair to pairs and all that, then leave a like, leave a comment for this chart. Do you see what I'm seeing here? Do you see what I'm seeing here? The data and the charts are telling us the same thing from time and time again. And I was lucky to experience a lot of like half this chart here, and the emotional side of everything too. Back here, very reminiscent back here, very reminiscent back here. So like I can feel the atmosphere, and people still can't believe that the bull market's about to go in full force. They're still, and it's because they thought we were going to keep falling, and they're hoping that to be the case because they may have sold out. And it's unfortunate, but that's just the market at hand. And if you sold out, you could wait. It's all on you, not financial advice. But if you're totally out of this market, I would say that is the biggest risk rather than owning even just a little bit. If you think it's going to fall, sure, that's great. But if you're a long-term believer in the space, then, and you're not holding anything, I think that's the real grave mistake. You know what I'm saying? So I would definitely look at what I'm showing today and rewatch it a couple times and then reflect and think about what your situation is. And if you want to hop on a one-on-one info session and kind of look at these charts and talk through them and kind of hear a little bit deeper about what I'm seeing, then come to the website, stargate-ventures.com, book your first free info session. I'll give you the knowledge here on how to read the signals and everything like that and show you what I'm seeing. Now we got our next chart, which is the government yield bonds, the 10-year yield bond. And this, I want to read to you why we watch the 10-year yield bond and why it's important for us as crypto investors. All right, so on the right side, I have the explanation of understanding the 10-year Treasury yield, right? So the 10-year Treasury gets more press than any other government security. Investors pay keen attention to movements in the 10-year Treasury yields because they serve as a benchmark for other borrowing rates, such as mortgage rates. When the 10-year yield fluctuates, it can have significant implications across the financial landscape. So that's why we've been watching it. We've been tracking it. I know it's like, why are we talking about bonds or in crypto? But it literally is the benchmark and one of those market dynamic charts that we need to look at, along with the dollar, along with the stock market, along with gold, along with a couple other things, because that is what is going to give us more data and a different insight into what will happen with crypto. You can't look at an altcoin only and just be like, oh, the market's, going into a bull run. You got to look at those key things first. Those are the core. It's like the core principles to look at when you're looking, then going into crypto charts. So we got this down here. So how does the 10-year Treasury yields work? It's the action in the secondary market that determines the yield. This is important to note because it's the rate that people refer to when they're talking about treasuries. The coupon rate, while technically the interest rate you will receive in relation to the treasury's face value, will likely be different from the effective yield you end up getting. If you pay less than face value, your effective rate will be higher, and more, it will be lower. So prices and therefore effective yields change for bonds almost constantly. That's because a bond's price is inversely related to yield. So when yields go up, the price goes down. When yields go down, prices go up. So the ebb and flow ultimately creates the treasury pricing market as people flock to and then from treasuries based on the economic environment they find themselves in. So that's what we're gauging with the bond yields, the economic environment. Are people hungry to take on some risk, or are they looking to kind of be conservative and not take on risk? So they're trying to get these US Treasury securities because they're virtually risk-free. So remember, all U.S. Treasury securities are regarded as risk-free since they're backed by the full faith and credit of the U.S. government. They've never defaulted on their debts. When investors get worried about the economy and market risk, they look for safe investments that preserve capital, and treasuries are among the safest investments out there. One of the foundational principles of finance is that risk and return are correlated. When markets are booming and the economy is expanding, the appetite to take on risk and generate returns is high. Risk-free treasuries become much less appealing because they're lower returns, and demand declines and treasury notes sell at less than their face value. So why is the 10-year yield important? It serves as a vital economic benchmark, and it influences many other interest rates. When the 10-year yield goes up, so does mortgage rates and other borrowing rates. When the 10-year yield declines and mortgage rates fall, the housing market strengthens, which in turn has a positive impact on economic growth in the economy. The 10-year Treasury yield also impacts the rate at which companies can borrow money. When the 10-year yield is high, companies will face more expensive borrowing costs that may reduce their ability to engage in the types of projects that led to growth and innovation. So the 10-year Treasury yield can also impact the stock market, with movements in yield creating volatility. So rising yields may signal that investors are looking for higher return investments, but could also spook investors who fear that the rising rates could draw capital away from the stock market. Falling yields suggest that corporate borrowing rates will also decline, making it easier for companies to borrow and expand, thus giving equities a boost. Global events can also have a significant impact on treasury yields. like the case of the UK referendum about EU membership mentioned above, US government bonds are considered the safest investments or anywhere in the world. And when geopolitical events create upheaval, treasuries are often in high demand from international investors, leading to lower yields. There we go. So now we're going to take a look at the 10-year yield, because now we know how important they are for serving as a core chart to look at, to gauging the market environment, the macro environment, and the market's risk and where they're at on that. We're on the 3-week chart. We see on this breakout of this downtrend, we got the 3-week buy now. I love the 3-week chart. It really hits it on the money as far as the macro trends. So we got the 3-week buy now, signifying the end of this downtrend right here. Boom, we got it. And we saw cross up, cross up, cross up. Then that was at the start of, no, that was October 2020. So bond yields went up and prices went down for actually the bond. And remember, when the yields go up, the price goes down, and yields go up to make it the yield more attractive for investors, because money is flowing out of bonds. People are selling their bonds because they have more of an appetite for risk and they want to take that risk. So yields go up because they're trying to entice people to buy them, because nobody's buying, there's more sellers. Now we're about to see a scenario where the yield's about to go down. It looks like it's about to go heavily down. And we got the 3-week sell now, and we're right at this trend line, and it does look like we could go into a crashing kind of structure. This looks like the dollar back right before it tanked, and we'll cover the dollar next, but it looks like literally the dollar up here. And then also, if I go to the monthly chart, we can see that we have a 1 month prepare to sell soon. We can see we had a 1 month buy now at that same spot, or a couple months after. We got the 3-week buy now right here, the 1 month buy now right there. And then we saw the cross up of the stock RSI right there. And then we went into our uptrend. We're about to do the inverse of that, where we're seeing the stock RSI about to cross down now, the TSI cross down, the MACD cross down, all at the same time, signifying the sell now is about to come in, and we will likely go into a downtrend with the yields. So what does that mean though? Why is that important to us? When the yields go down, the price of bonds go up, which means investors may be flocking away from risk. They may not have an appetite for risky investments. So that's something that may be on our radar heavily, and kind of taking that into account when looking at these key core market macro environment kind of charts. So that is definitely interesting. And if we go to the past times we kind of sold off for the bond yields, this was December 2018. And at this point, this was the bear market bottom for crypto, and we had sold off rapidly for the bond yields, right, at this point. And this was when crypto bottomed and literally went into its 4x in 90 days, and then it had a little correction, and then it sold off here, and then we had our everything kind of sold off at that time with the COVID crash. And then when the COVID crash happened, we kind of just traveled up here with the bond yields. And now we're at a point where we could do a crash in the bond yields, which has led, based off the last time we had topped, it led us into the bear market being over and us rallying very nicely over the coming months. So we have multiple signs and similarities to 2019, just like we did in this chart over here, 2019. And just like how we did to this chart over here, 2019. So we're doing a lot of similarities to 2019, as well as there are some similarities to the 2015 bear market bottom as well. So now let's go into the dollar, because right now on the 5-day chart, the dollar is sitting at a critical level, or this horizontal line that we came out to rejection. We got above, but then came back down, rejection, COVID crash. We broke above it back here, April of 2022, crazy. And then we came down right to it, and we're holding wicks at it right now. For us to go and solidify this huge crypto market melt up round 3 at this point, the dollar is going to come down, and it would have to break this horizontal line right there. Let's just say it's at 100. We'll say it's at 100. And I believe that it's likely going to do it. And here's why. And before I forget, like this video, subscribe, hit the notification bell, and share this video with people who think that we're going to go into an all-out recession across all asset classes, and show them these things, because not many people are looking at these charts, and we need to notify them right away, because it's time to get them back on the train before it's too late. Nothing's worse than having a friend or a family or, anybody buy crypto and being like so pumped that they finally did it, but they did it during like the top phase, and then they end up selling at the bottom and leaving crypto altogether, being salty about it. It's like, man, you had the golden goose. You had the golden market that was going to give you these life-changing returns to break you out of the trap of the current financial system, and you literally tossed it out, the bag out, like it was a piece of trash because you didn't know what you held. And they're selling right now. They're probably thinking, oh, I should sell it now and buy back when it goes back down. They're trying to get fancy and cute at the bottom. We're over here saying, yeah, you got to share this video to them and tell them you better start executing your trades and getting back in the market, because we're potentially at a level where we're going to start shooting up and leaving everybody behind. And that's what I'm watching for the dollar for the short term, as far as like looking at where we could be in this dollar downtrend. We could be somewhere right here, September 2020, right before, we rallied up a little bit, but it was just something light. It went sideways. And really, this was the whole bull run of crypto right here. Is not much of a, it wasn't really much of a fall with the dollar. It was like October, November, December, January. It was like all this right here, like what really was the bull run for crypto. So it's not much to really do something like that and go down a little bit more here, and for us to all of a sudden just go crazy in the crypto market. So we could be at a scenario where we're right here comparatively, or we could be right here, or we could be starting our breakdown. But another thing to pay mind to is I'm on the 5-day chart, and we're looking at the void lines. So I'm going to hide everything else. And every single time we topped for the dollar, you see the void lines, this color kind of coding to it, the red, orange, yellow, green, blue, purple, red, orange, yellow, green, blue, purple, analyzes the fractal patterns and kind of when we should see a change in structure, or continuation, or acceleration in structure. I'm sure you might have noticed. If you notice, let me know in the comments as you notice what I'm seeing here as far as the color structure. But every single time we enter into this orange yellowish phase like this, that's when our market's hitting its top, orange yellowish phase. And then the green, we're going down. Orange yellowish phase right here, orange yellowish, the market bottom right here. So we went from a top orange yellowish phase to the bottom orange yellowish phase, to then going sideways here. So this is orange yellowish phase, but nothing really resulted much from that. It was just sideways. But then we got another orange yellowish phase right here, and that was our top, right? Our top. And then fast forward, orange yellowish phase, that was literally our breakout from our bottom to then go into this rally. And what's happening right now? Orange yellowish phase. And we are heading down. We're already hugging the bottom of this void line, very similar to back here. What's happening right here. So what I believe is there definitely is more downside for the dollar this year. It's not showing you guys these charts doesn't mean, oh, immediately tomorrow it's going to just moon to crazy prices. We're looking at high time frame stuff. We could tank today in prices, but as far as everything that I'm showing you, these key big macro core charts that we're looking at to determine the direction are signifying, hey, dollar down, bigger picture. Bond yields down, bigger picture. Crypto's up, bigger picture. Stocks up, bigger picture, right? I believe we're going to rally hard here, catch everybody by surprise. I think maybe there's going to be something around May that causes all markets to drop, dollar rise, and then bond yields rise. And then at that point, whatever that event is, once that dust settles and the dollar rolls back over, bond yields roll back over, we're going to see then at that point, the crypto markets go into its all out run. So that's what we're watching there. And if I go down to a microscope, we're right now close to a level where if we get rejected, we're going to keep just heading down. And this could happen sooner than 9 days. I keep saying 9 days, but honestly, this could happen imminently. As soon as we see a decisive breakdown of the dollar and crypto, it's going to happen fast. And I want people to be ready for it. A lot of people think it's going to come back down and just hang out. Maybe if it comes back down, it's a quick wick. It happens in an hour and then it's bought right all the way back up. Around this time, it's not the time to get fancy. It's the time to get positioned. And what I'm seeing through all these charts is you want to be positioned and exposed to the crypto market, and you don't want to be all out of it. Now, if I look at the stock market, we are seeing on the monthly chart, we're holding the EMA ribbon. And every single time on the monthly chart since 2004, when we're above on top of the EMA ribbon, it's bullish. But then when we break below it, this is the great financial crisis. This whole time for a decade now, more than a decade, we've been holding this EMA ribbon as support. We actually broke down below it back here for multiple months. And we found some life. We caught the breath in us and we're trying to get back above it. So this is good. This could have been a scary moment, something like this, but we managed to recover. And right now, what we did was we retest the 786 of this high that was set right here to this low that was set right here. And you can even see the wick tapped that 786 to a T. So our level that we want to watch in this bigger picture time frame here, that's going to be so key, that's going to determine so many things, is 13,000. If we get above 13,000 to 13,300, hold there as support, things are looking very good as far as more upside, melt up for the markets, all markets, and for the dollar crash and bond yields to crash. That's what I'm watching now. We're panning out. This is going to be a critical month because it's going to really tell us a lot about how this whole year is going to unfold. So it's very important to pay attention to these things. I'm going to keep these high time frame charts. I'm not even going to touch them because we're going to revisit them once a week and make sure we're staying on track. So if I go to a 3-week chart, you can see we're about to cross up in the stock RSI, TSI, MACD as well too. In 7 days this happens. Right now we're peaking our head above the EMA ribbon. I would love to see us get above that $13,000 to $13,300 or $13,000 to $13,300 area, hold as support. And now it's looking very likely for the stock market to melt up. It's like very exciting time, guys. It's not a joke. You should really watch this video multiple times. Look at the time frames I'm using, look at the charts that I'm using, and really deeply understand the significance about what may be on the horizon here. I think a lot of people can't even fathom it. A lot of people have that bear market trauma still. I get it. A lot of people, lost all hope in a year down of a brutal bear market, brutal. But when the dust settles and things start turning around here, it can happen very, very fast. Believe me, it could be a matter of months and your whole life is really flipped upside down in a good way though. But we got gold now. So gold, something's happening here. We have this high down to this low. And right now we came up to the 786 and so far getting rejected. I would like to see gold come back up and hold a 3-week candle above 1,970. Because if it does that, to me, gold is about to melt up and could see a price point at 2,400. And what's very similar is this kind of pattern that's playing out. Usually like, all right, you have your pump up and then you go down once, you have your pump up, go down once, and you kind of do this diagonal trend line, and then you fall off from it one more time, You come up here to get close to retesting that, come up here again, close to retesting it, maybe a little knockdown at first. And what I think maybe a little knockdown at first, and then ultimately around March, April-ish, we see this kick back up and it's just going to be boom. And then you're going to see gold, I think, have it be the start of its next multi-year bull run as well too. A lot of things are showing this. We're not on a 3-minute chart. We're on a 3-week chart. So every candle here consists of 3 weeks worth of price action. So it's no little time frames, that's for sure. But this is very on the radar. So let's kind of summarize where we're at this point. NASDAQ 100 against Bitcoin, signifying that the bear market's over, bull market is ready to go in full force. USD Tether versus the total market cap, signifying that we are ready for the bull market to go in full force and the bear market has already ended back early January. Then we see Bitcoin versus NASDAQ in inverse look, signifying a 3-week prepare to buy soon, which is the second time in history in all of Bitcoin that this has happened. And it's going to flash a buy now. And it could be in 9 days here, called the sells on these bull market tops. So it's going to call the bottom as well too. The time analysis lines up and the fractal lines up, and we could see a huge run from 2023 to 2025, hitting crazy price points for some of these coins and majority of coins that we hold, because we're holding all the ones that provide that utility, that value. And we're heading into a period of institutional governments, banks adopting, and companies, big corporate conglomerates adopting these technologies now. And we're heading into that adoption phase, baby. You can see it right here. It's going to be huge. Then we got the bond yields looking like they're going to crater. And we just learned about the bond yields and why that's important. And now we have the dollar. We're on the 4-hour chart and it's looking like it's going to curl over, but we were looking at the 5-day chart and we said, hey, we're at the point where we see the orange and yellow. We're melting down, orange and yellow melt up. So like orange and yellow melt down. So like the orange and yellow call the bottoms, call the tops to a T. Definitely such a cheat code. We literally have such a big tool belt. Our toolkit is loaded up. We got all the tools to really crush every single bull market and bear market to a T. And we know which charts to watch now going forward. So rest assured, you're in good hands knowing these charts now, having this software, and you're going to feel very empowered as far as you're going to see the trend, see what's going to play out beforehand with the tools that are provided with the Stargate software, as well as in the Discord with automated alerts, and just the type of stuff we're doing, the pair to pairs, and just looking at like Bitcoin to the NASDAQ. Everything is screaming to me. And this is not with any black swans. Obviously, there could be a black swan or critical catastrophe, world event, whatever it may be, that kind of throws us out the window. But that is something that we're not going to bank on. We're not just going to bank on a black swan happening and just sell all of our positions to hopefully catch it. Everything right now that we looked at and looking at the historical performance of these things as well too has signified, hey, bear market's in for the dollar, or the dollar is going to start heading down here heavily, and the bear market's over for the stock market, gold, for cryptos, etc. So if you like what you're seeing, you agree with me or disagree, I would love to hear the other side of the coin here. Leave a comment, leave a like, share this with everybody you know that's in crypto or thinking about getting in crypto, because this is so important, guys. I'm not even joking. Like, these charts, literally throw them up on your trading view yourselves. Look at the past, compare it to when Bitcoin went on its bull markets, its bear market, bull markets and bear markets. And you're going to see exactly what I'm seeing here as far as, hey, like, this is very hard to deny. We're talking about decades of history with the same things panning out, and then us kind of shooting up heavy for 2 years. So enjoy it. Start getting real positive. Start feeling the emotions flow through. It's all right, because interesting times and fun times are ahead. That's for sure. You want to definitely embrace and embody this whole moment that's on the horizon, because I'm telling you, your life will change if you're into the right assets and you're invested and you're staying track and keeping on top of this market. And if you want to get updated in real time when these key things happen, come join the Discord. I'll put the link in the bio. We're tracking these every day. We never skip a day. We're always on it. We're always watching it. We got multiple hands on deck, giving that white glove service, watching these things, letting you guys know when it's time, baby. And I'm telling you right now, I stared at these charts for 5 hours. Your boy hasn't slept yet, because it's hard to sleep when you see things like this. I remember seeing these same things back in 2019, back 2016, back to 2021, 2020. Like I literally could look at a chart and tell you where I was every single step on the way. And right now, I'm just happy to be in this moment right now, being at where we are, doing Stargate, doing this content, showing you guys what I'm seeing. And I really hope that it's helping you guys get a little clarity and seeing the light a little better, because I'm here to tell you, just now's the time to get excited. So it's Friday, it's 4:21 a.m. This is it. This is a crypto market update. Huge charts to watch to signify that the bear market is over and the bull market's in. And it may be the last opportunity for you to make generational profits for you, your family, your spouse, everybody you care about. So definitely watch this video a couple times, reflect on what I'm showing you, look at it yourself, double cross-reference it if you'd like to, or join the Discord, reach out to me on DM, or if you want to just come to the website, I'll put the link in the bio. Let's talk, because it's not a drill. It's not a drill. So I'll see you guys in the next video.